Hello, everyone. Happy Friday. How's everyone doing? Is anyone else glad the week is over? Let me know. Good morning, John. I am. Thank you for putting in the earnings, Sterling. Good morning, Patrick. Good morning, Sterling. Got some earnings in here. Constellation Brands was a beat yesterday. JP Morgan, which list this morning, which officially kicks off earnings season for Q1, was a beat. BlackRock was a beat miss. Wells Fargo was also a beat miss. Morgan Stanley was a beat. Bank of New York was a beat. Fastenal was a beat or inline beat. Thank you again. There we go. Good morning, Jake. Hello, Charles. Good morning, Jacob. Good morning, David. Good morning. Yes, day 4 for options 22. Is this becoming a habit again, options 22? So, high yield bonds see the biggest ever weekly outflow. Yep. Treasury see biggest weekly inflow. Interesting stuff. Yeah, foreigners sell 6.5 billion of U.S. equities. So, we shall see how this all plays out today. Hey, good morning, Harold. What else do we have? We have the PPI numbers. Now, a lot of this was due to a drop in oil prices over the last bit. So we'll have to see if this continues. But the PPI numbers coming in deflationary, 0.4% drop in month over month. Core was a 0.1% drop. Year-over-year numbers fell from 3.5 and a consensus of 3.6 down to 3.3. X food, energy, and trade, see, was still up slightly. So a lot of this was due to oil. PPI year over year coming in at 2.7, much better than the consensus of 3.3 and the prior of 3.2. We also already had a cash and carry speaking, and we have Collins speaking. So we also have the consumer sentiment numbers, the preliminary for April, and the consumer expectations. So we're going to have to pay attention to that at 10 a.m. Eastern or 30 minutes after the cash open. And then we got Williams speaking, and then hopefully it quiets down. I'm ready for the week to be over. I'm glad I could teach you how to fish. I'm glad you're back, and that was my goal. It was not to sit here every day and pontificate. It's actually to teach people so they can go take it and take some things and make it their own. All right. Good morning, Royal Palms. That's the whole point of this channel. Good morning, Heinrich. What happened to spring here in Mid-Atlantic? I don't know what happened. Been tariffed, I guess. Well, what happened? We're going to be 102 today. 102. It's April 11th. 102. That's a little hotter than normal. Record highs. Good morning. Good morning. So maybe we're having a weather trade deficit with you, Richard. We're hoarding all the warm weather and keeping it from East Coast and the Midwest. Really, Chicago's been colder than normal too. Good morning, PMG. Good morning, McRangers. Did I already say good morning, McRangers? Well, you get 2 good mornings if I did. All right, so we had the better than expected PPI numbers, but really, if you look at the markets, they're not really trading off this information. Because of what's going to be the next social media post or the next soundbite from the administration. That's what's driving everything right now. Mega caps mixed. Oops. Mega caps mixed. Nvidia and Broadcom are up. AMD's up, but then you have some other stuff like Texas Instruments, Analog Devices, Intel, NXP, semiconductors down. We had a little pop in the banks, but now they've reversed course. So it's flat to choppy. Healthcare is stronger than normal. Let's just look at why am I going through this? Let's just look at the groups. Gold to new highs. Basic material, energy, healthcare, consumer defensive, all up. Starting to get a little concerned again with gold because, stuff I'm hearing more and more like, oh, I can't even add more. This is my largest position. I'm all in on gold. I'm rotating out of stocks into gold. Everything's so. Trend is still up. Okay. It's getting from people I'm talking to and things I'm hearing, I mean, everybody's just piling in. And when everybody's piling into something, it's at least good to know where your stops are, because it's starting to get a little overblown. A little overblown. Probabilities. Let me just refresh this. Give me 1 second. Let me just do a good old refresh here, just to see if anything changed. We still have pause in May, then 1, 2, 3, 4 cuts by December. So contradicting things that the Fed's doing, but the Fed can change on a dime. We also know that. Fear and greed still in extreme fear. Schiller PE back down to 32.55. All right, we already went through the earnings, so that wraps up this week with earnings. Next week really gets going. We got more financials going next week, so keep that in mind. Here's what I was watching overnight. We did form a little mini double bottom in the NASDAQ. I'll get the S&P in a second. That didn't have one. And I was watching for the trend line break, but I'm really watching right here. Key support going in the open about 18,350. This is a sort of a weak double. If it does continue higher, that's why I'm using these levels for higher prices, about 18,975, 19,130, and then a very significant level right around this 19,256. Now, what would be the invalidation point for these doubles? I mean, we have so much volatility. I'm looking for larger patterns right now. I'm just pointing this out. Why can't I click today? It's a Friday and I can't click. Validation point is a close below 18,196 on a 1 hour basis, or a trade through 18,103, which would also then drop back below the trend line, and this would be a failed trend line breakout. But if it does get going, if you're not in something already to the long side and it starts accelerating back above 18,700, could be a nice resumption, little mini resumption of trend into Friday. We will have to see how that plays out. Yesterday's major support came back down to the 50% harmonic from the run-up, and it found support there. So if we do break down, that's the key area. And also remember, after hitting the first target, not quite to the second target, the invalidation point is if we were to close below 17,568.75. Or if we collapse today and trade back down to 17,206, it is invalidated. This is why we don't ignore at least raising stops when this first thing is hit, and possibly, as Sterling does sometimes, and based off this move, take some profits and then raise a stop to help cushion, because we have so much volatility now, it's just insane. S&P did not have a little double. I was just watching the trend line break, which it came back, tried to kiss a goodbye, and now it's coming back to a key support level right around this 5,270 area. If we break down from there, there's a pretty decent support level at 52.30, and then yesterday just dipped below the 50% harmonic very briefly and then retested it. So 51.80. What invalidates the pattern after also hitting the first target would be a close below 5,093, and I'm not talking a 5-minute close. This has to at least be, I mean, if you want to be aggressive, it could be a 1 hour, but I'd be looking at 4 hours or more, or a trade through 5,007 if we collapsed. Since there is no upside double targets on this, I'm looking on any rally. Here's the levels I'm watching. 54.05. Then I'm looking at 54.45, and then I'm looking at the prior first target, should we get a bigger rally on. The Dow, again, no double. Very key support in the Dow's 39,270, and then dipping below the 50% yesterday. So I'm watching really between about 38,850 and 38,900 for support. Invalidating the rest of the double pattern on a close below 38,370 or a trade through roughly 37,800. To the upside, it's got a breakout. There's very significant resistance around 40,150. Above there, at least the next target for me is about 40,375, and then I'm looking at this little breakdown zone of 40,680. The Russell. Also, the Russell's the weakest. This is the weakest thing for any bullish plays. So this is the last thing, but I'm just putting this up because it's technically a pattern. It triggered. It might come down in the open and already invalidated. 1819.9. If it closes back below that, it's invalidated, or if it trades through 1811.4. Again, these are mini patterns. I'm trying to avoid little mini patterns with this kind of volatility, because the volatility can knock out many patterns. That's why I'm really focused from a trading perspective on 4-hour patterns or higher. It doesn't mean they can't be traded on a lower time frame, but I want the patterns from the higher time frames. I'm putting this up there so people can see these patterns. But when it's not this just environment, this is not any commentary. It's when we have these super high volatility environments, I focus on the bigger patterns because the probabilities are much better. Because when you're super high volatility, I mean, look, we're back up about 44. By the way, the VIX, this move invalidated the double. Didn't work. Invalidated double with yesterday's pullback. So looks like we were going to be watching for volatility to collapse. Did not. Coming back and staying elevated, which also concerns me now, that we could theoretically break down and retest Monday's lows at some point. These markets are not calm at all. The DAX, nothing that changes here. We have the little very sloppy 4-hour double, lopsided 4-hour double that didn't even make it to the first target. But it's still not invalidated. The notes, I am keeping an eye on this. Okay, now from the head and shoulders perspective, the walkaway trend line, for people who know that concept, if it closes below this, I'm looking at the close the way I do it with the 62.5. So if we close below 109.27, the rest, after only hitting the first target on that inverse head and shoulders, has been invalidated. We do have a little mini. It's a little sloppy because this move in here, but it still qualifies on a daily basis, but it would need a daily close above 111.11. That's the only thing that could bring yields back down. You can see on the 10-year yields. And this might this did not pull back to invalidate the pattern, but this might already, again, on a yield basis from remember I talked about because the note futures hit the first level and this just missed it. It was still lower a stop from my perspective. Monday or Wednesday did not close above the key 62.5. Yesterday did not, but today, unless we get some real pressure on the yields. And think about this. What did we have yesterday? We had CPI coming better than expected. This morning, PPI better than expected. What are yields doing? Yields are still climbing. There it is. Okay? Think that is exactly the opposite of what you think would happen. So something is very off. Now, there is still potential a double top in here. It would need a daily close below 4.244 to trigger. If this keeps running, though, and look at where the next cluster. Now, it'd have to get above this what is that number? Let me just see here. Come on, 4.56 area. That would invalidate this little mini potential double on the daily and would be the 75% harmonic. Also, if it closes above the 62.5, that could trigger the probabilities that we return. Wow, we return, to above 4.7 and even possibly 4.8 in yields. Look at this move in yields. The market is not it's just not healthy. Does not mean we have to rocket to new lows, but we could stay in. Let me jump back to the S&P. If the rest of double isn't validated, not saying it will be because it's still against the rotation zone, so we still have downward pressure on here. But we could end up in a more of a market consolidation instead of a snapback rally. We could still have a capitulation bottom without really, and we could stay in a range for a while with a capitulation bottom. Now, if we do take out this bottom area, then watch out. That was just a jump back. It's something I'm keeping an eye on. Not saying that's going to happen either. Again, we have to take it day by day and literally hour by hour with this administration because you don't know what's going to happen next. Dollar index Coming back down, just missing the next key harmonic area. Spiking down earlier, but remember the double. Still said yesterday the trend was down. I was watching a case. We did solidify the double bottom, but yesterday's price action just fell out of bed and then followed through overnight. Look at that. So, but the dollar is getting drastically oversold too. There is no bottoming pattern yet. I'm keeping an eye in this area, though, to see how it reacts. If we continue to break down, we could see the dollar get real. I mean, this is prices we've not traded since, March of 22. What have I missed on some? Let me see some comments in here. Let me see. Where are we? Trailing stops in every position has been hit. Yikes. Well, be grateful you have stops. So many people don't trade with stops. Stops are there. We don't always want them to get hit, but they're there for a reason. With basic materials and energy up, doesn't that signal growth? Clarify that statement. Not necessarily. And I think we're going to end up in a conflict again with Iran, which will be interesting for energy prices. We're in deflation mode. Yeah, the Supercore came in much better month over month. A lot of this, though, is due to energy prices coming down. Stuff like rents and houses is still up. So we either need to reinforce it with some other areas and see if this continues to unfold. But if we get a bounce in energy, if we get into a conflict with Iran, it will be very interesting. Yeah, gold is crazy. Thank you for being here, Dark Screen Sleep. Look at the weekly candle. Can we say stagflation is end in recession? I don't think this is going to work out very well. I think we are going to tip into that, but we have to see. Yeah, treasury bonds are being sold. It's still not, yes, this is a slight acceleration away from the dollar in all this chaos. So I don't know if I don't think China's the major seller yet. I do not think China's the major seller yet because of where they have to peg their currency, because they have to keep pegging devaluing their currency yet. All right, let's take a look at crude. Speaking of energy, we came down that harmonic cluster, bouncing up. I'm still watching to see if we form a larger bottoming pattern down here. Trend is still down after the key bounce back on Wednesday off the major harmonic cluster. Now, if that were not holding going forward, the next key level is roughly 53, but I'm really watching for a potential bottoming pattern coming in here with silver, with crude, not gold or silver, with crude being very oversold, but there is no pattern yet. Gold. We had the next harmonic cluster, 3260. You see the double harmonics up there. That was the reverse harmonic and the prior forward harmonic. And we've come up right to that area. Now, we haven't technically invalidated the double top. And you see, look at this weekly bar. And again, pretend this wasn't gold. And pretend this was just another chart. This is getting to the vertical stages. And what happens when something gets vertical? That's all I'm saying. Now, I'm not saying this has to stop. It'll just get more vertical. But know based off your duration of holdings, where your stops are. Because as soon as when I'm hearing, again, I'm all in gold. I'm getting out of other stuff. I'm going all in gold. The time to get in gold, if you were late to the party, was back, at this 2100 level. The time to pile all into gold is not 3100. 3100 was a short-term trade. We had a % B buy falling through, really nice move back up. But this is a short-term trade. I would not be leveraging, selling my house and going all into gold at this point. It's still tradable. Just be careful. Keeping an eye on copper. I posted my thoughts in Slice on copper, but I'm watching to see if this double does trigger, and I posted the way I was going to play it on Slice. Yen coming down, virtually completing the 87.5 rule. So also remember, don't know if this will trigger, but there is a because of this, it's not the best double top because this is technically the move. Well, we still have the larger move that started, but I will keep an eye on that if it does trigger. Euro skyrocketing up, breaking above very major resistance we talked about, and spiking up. Look at that. 1473 area. Again, you don't want to hit the 1473. I mean, I'm not touting this because it hit exactly, because you don't want the, we're not trying to hit things exactly, but it gives us an area to, at least if you were long the euro, an area to at least raise stops again. Now your major support is back at the breakout area. Things are getting lopsided though on this too. Spiders, again, the double bottom has not been invalidated. You can see here the 4-hour double bottom. It would still take the close below 506.86 or a trade below 498.51 because we did hit the first, sorry, let's say 497.90. That was a little it was unanchored. I got to revise those levels. Sorry about that. A close below 506 and or a trade below 497.94 to invalidate it after hitting the first target. Other than that, a slight gap down today, so the first target intraday on any rally would be 524.66. Again, pay attention to between about 511 to 514 for major support on a pullback. We will have to do that later, Sterling. I have a conference call right at the market open. So I'm just trying to get through a couple things, and then I have to jump right at the market open. I have a conference call. So the Qs, 446.13 is the gap fill. Again, key support I'm watching is around 435. Should we drop again? All right, after hitting the Qs, hit the first and second targets. So at least if you raise a stop and then you got to unwind and take some profit off on the second target. Bitcoin, by the way, we have a double bottom pattern that is officially triggered in Bitcoin. Okay, and I don't even know if that would be a valid double top. Technically valid. So if we close back below, 78,387, Bitcoin would be not even getting to the first target on that trigger double, but I'm keeping an eye. And this is in consolidation. This is not this is not a massive breakout play. This is an in consolidation Bitcoin play. But the double has officially triggered. This pullback did nothing to invalidate it, and there is no stop raise yet in it. So let me go over the invalidation point. The invalidation point is 76,971 on a closing basis, or a trade back below 76,121. But if this double were to trigger the other way, then it would pretty much be done from my perspective. So yes, lower energy prices and lower basic material prices signaling weakened demand. So would increased price of energy and basic materials increase demand? Not necessarily. Not necessarily. Not necessarily. Things are very distorted right now also. Let's just peek Tesla. Not much going on for those Tesla bulls. There still is a weekly double bottom potential setup. That's not been invalidated yet. It has to be traded on a weekly. Other than that, remember we got delivery. We got earnings, not delivery. We got earnings coming up in a couple weeks. And if it does break down below this double bottom base, the next major target is 184 area. that's about all I have time for. Let's just peek back in the S&P going into the open. Trying to hold this very key support level. So I'm going to be close to, well, I'm on my call, I'm going to be paying close attention to that. So that's where we sit. Sorry I have to run today. I just have to prep. I got 1 minute to go. So I will see everybody next week. And I hope you all have a wonderful weekend. And don't do anything silly on a Friday. Thank you for tuning in. Bye for now.